Alrighty, Doc here from North America. It is TGIF. That means it's thank goodness it's Friday. It's the end of the week. We have the Fed chair speaking in an hour and 28 minutes in a Zoom. Everybody's pretty much convinced that he's not going to really say anything solely because no one's there. And so there's not much of a reason. And he's already kind of said he would like to see one more month of data before he discussed what should be dealt with or why it should be, or something of that nature. So that's where we are. So we're just like another month of waiting. We've been saying this since June that we thought that any actions would be in the middle of August, and obviously now that Jackson Hole is not going to occur, we probably have September, which is classic to go into the September-October action that we normally see, in past history. Even with quantitative easing, anything is possible. I myself don't really believe that anything's going to change, but hope is eternal. So let's just watch the markets. We watch it through our mathematics, which is the most successful way of ever watching markets, as far as I can tell. If someone sees anything else, that's good for them. So let's get rolling along. Now there's the silver this morning, and it's having its issues. It's not able to get rolling. But let's go take a look at this. Is a currency webinar, so let's jump right off to the Swiss. A good way of looking at things. Now we've noticed that the Swiss is kind of going on walkabout a little bit compared to the euro. The euro is actually showing a little strength in the last couple of days, or maybe last week even. As we take a sip of water there. There is the Swiss. Let's put it up on Chicago Quant too. Let's see, where is it at? I guess I got to load that so I can close that. And then what we will do is we will load that. Let's see, where is it at? Right there. Open. And that should do it right there. All right. So now we're opening up this, and yeah, I think that's the way it goes. Good. Let's see what we see here. Get those out of the way. Cancel, and voila, there we are. And there is the Swiss. You can see Swiss went into a buy yesterday right there, and the weekly is still in a sell since here, so we're pretty much going sideways in here. It's almost like a dampening wave. I think let's make that a little bit tighter. We started playing with that a while ago. Remember we put those lines up? This is the range. The red dashed ones is the range we've been watching for like a year and a half now. But we've noticed that this is evolving inside of it. And it seems like it's trying to tell us that the trend is down, possibly? Maybe that's what it's trying to tell us. And it's trapped in this oscillating range that seems to be expanding. And looks like this is just, see how this is right here? I think that's what that was. So maybe the next move will be a very big move. The world is kind of all over the place, so there's not much to be said about that. Hey Jordan, how you doing? It's awful hard to try to predict exactly what the basic elements are. We only can follow it through our quantitative way, but we're just trying to figure out, are we seeing some type of shift or change, or is it just dead summer? Those red lines or red dashed lines seem to represent the range that they've been holding this product in for over a year and a half. Now, and we see that throughout a lot of these products over the last year plus. They seem to be holding inside a channel. And we know that the U.S. Treasury defines who is a manipulator and who is not through some type of channel or envelope. So I think we may have identified the range that helps to define when the U.S. Treasury says, okay, you're a manipulator of your currency versus not being a manipulator of your currency. I would assume in my head everybody's a manipulator of their currency on some level. That's what repos are. Overnight lending, the overnight bank window. That's what that's all about. Is basically increasing or decreasing money supply, cash supply, actually cash supply to be exact. You sell bonds to the banks, you force them to buy your bonds, it sucks up their cash, and then when you want more cash in the system, you buy those bonds back that they bought from you as a central bank. So now the central bank is buying those bonds, plowing cash into the financial system. So it's really hard to take it's pretty hard to take serious in general when the U.S. Treasury says, okay, you're a manipulator or you're not a manipulator. It's a very weird thing as far as I'm concerned. All right, so there is the Swiss. You can see it seems to be heading back up to the green side of that, well, the top side of the green. And you can see the daily has moved into a buy, and let's see what J4X says. J4X says, obviously, most of the time, joins in with the gang here. You know, with especially our most favorite indicator on this J4X, and that is the fast stochastic moving against the slow stochastic. And then the Hinkies are a few hours behind, but they are confirming type of action. So now that's the Swiss. We'll jump over to the Euro, because the Euro's been acting a little independent of late, and that's kind of nice. That's what we were always hoping for when they created the Euro. So that was definitely that's a positive thing when the Euro starts to act a little more independent. That's what we want. We actually do want that. We really do. We really, really do. So, and there it is. It jumped up on the J4X chart right there. And you can see, you know, it's been acting strong here against the dollar for about four days or so. What's it, on line 14? Yeah, we're 4 days in a daily buy. We flirted yesterday and the last couple days with the weekly buy over on Chicago Quant. Right there. We can lift this up a little bit like so or something like that. Yeah, right there. It tried to get into the buy. It really did. It seems to have started to roll over again, which is a real surprise to me. I thought, okay, finally it's going to jump into the buy, but it didn't. It's backed off again. You know, that's pretty much the way it seems to be. You know, it should be joining in the buy side of this if it's really going to get going. Is that the Euro? Oh no, wait, but that's not the Euro. That's the Swissy still. Let's go over to the Euro on that on Chicago. The matchup to, yeah, there it is. This is the J4X of it. You can see the strength of it for days. Same thing here. Let's widen that out. Same thing. Buying going on for a bunch of days there. It tried to go yesterday and sell down, but did not. And there's the weekly. It was through the zero line. I had a cute little green circle there for a little while over the last couple of days, and then it's kind of backed off again. So we're waiting to see if the strength is going to come back into, you know, if the strength is going to keep on going into the Euro. You know, maybe we might be seeing a distribution going on. You know, it's the dead time of the year, so I try not to take this too serious. But I'm wondering if we're starting to see that. You know, you saw how the Swiss started to outperform everything for a while. Now money's pouring into the Euro. Maybe they're starting to try to move away from overextended in the dollar. I'm going to use that expression. In other words, I don't think they're going to move away from the dollar, but I think that they're going, you know, I think that funds or, you know, especially Forex funds and so forth and institutions may start to think maybe we need to spread out the risk a little bit more. And maybe that's what we're seeing, just a redistribution of risk. All right. And so, yeah, we're going to watch to the end of the day and see if we get into a buy finally here after, what is that, like 11 weeks? Let's go to line 14 again. Yeah, 11 weeks in a sell. And we've been 4 days in a buy, and it's been trying. You know, it's really been trying. We've been in that sell since back up in here. The envelope that we have is in red, you know, that we showed you on the Swiss. We identified this envelope that's been going on for over a year in the Euro, and it gets down near the bottom, it goes up, gets up to the top of it, goes down. Looks like they've actually tried to move the range of it, really. And there may be adjustments going on here. This area here may be, you know, due to the fact it's past the dotted lines, we spotted, and notice it bottomed earlier. They may be adjusting for inflation to the channel. That's what may be going on there. All right. Now what we do is we head over to the British pound. We'll do that first through J4X. Right there. And let's see, what am I looking for here? Okay, that's that. And at the same time, you can see the strength in that. And we were in a buy on Chicago Quant. You can see on line 13, I think we went into a sell there yesterday, right there. And we're 2 weeks in a sell. Now let's take a look at it through the Chicago Quant characteristics and see. Right there. So it fell into the sell yesterday. It's flirting to try to get into the buy, and you can see at the same time, went into a weekly sell a couple weeks back from up in here, and it looks like it was fighting also like the euro, trying to get into that buy, but it didn't do it. It just like kind of hesitated around it. So I don't think there's a lot of more you can say about that. I guess that's the best way to describe that. There's not much to be said about it except for it's trying to show some type of support, some type of strength there. I guess that makes sense to everybody, right? Yeah, I think so. All right, and that is the British pound, and we'll see if it rolls over or stays there, or does something of that nature. I'd imagine that will be the answer to it all in the end, All right, let's check out the Turkish Lira now. Right there, start off with the dollar Turkish Lira pairs trade. All right, another sip of water here. I just feel dried out. All right, there is the Turkish Lira is trying to turn up. You can see it's at the bottom range there too. And at the same time, let's see what it looks like here on Chicago Quant. It's flirting with a daily buy, just like J4X is doing, trying to go up. The weekly is still down from here. So, not a lot of solid, upwardly, it's very positive for the Turkish Lira. Let's put it that way. In other words, the dollar is going down against it, which is a good thing for Turkish people. Then let's jump over to the Euro Turkish Lira. Right there. This is kind of a little bit usually ahead of everything. You can see it doing the same things. It's been showing lots of pressure there. It's a couple of weeks longer in a sell too, which is really curious. Whoa, that didn't do it. Right, let's go like that. Let's see where we got here. Right there and there. There we go. And so there's the action in that. You can see Turkish Lira is trying to get up in our work, but not doing as good a job as against the dollar. So that tells me that there's probably going to be more weakness. Again, the dollar is going to be weak, which I suggested yesterday or the day before. I'm starting to wonder if we're seeing that weakness as part of a manifestation of just money trying to move away from the dollar, just in general. And just to, no, we don't want to really be that deeply involved in the dollar right now. We want to be a little flatter, that type of attitude, And I don't blame them. I think that's look, I don't think there's a lot of clarity of what the dollar is going to do. We know the Federal Reserve keeps it all pumped up no matter what in the end. But we really don't know if there's going to get to a point where it gets trapped, and then all of a sudden everybody starts to think, okay, I think we'll just kind of back away from it a little bit, that type of thing. I think that's what I think we're seeing, is that money is trying to adjust a little bit. I think that's all it is. Money's trying to adjust, don't be over positioned in something. Just be where you have to be and not anymore when it comes to the dollar. I think that's what we're really seeing here. I think that's the best way to describe it. Another sip of water. I just feel kind of dried out. All right, there we go. Now, from there we go over to the Canadian. Let's see what the Canadian's doing. I understand they're in a election cycle. It's going to be very fascinating. I heard the Chinese were saying something nasty about it. Chinese are funny, aren't they? It's so funny to watch a communist country try to tell us what freedom looks like. It's a very strange thing. You can see here the Canadian is trying to lift up. You can see we got a green hinky. We got the white line really almost piercing the dashed line. So that's a bearish sign, really. We'll see. Let's see what it looks like over here on. That's it right there. It closed in a daily buy yesterday. It's moving up a little bit more today. We've been in a weekly buy since back in here, and the what is that? The 6th
market data connection
10.
Lost.
Now, what did we do? We just lost something. Just one of my platforms.
Market data connection reestablished.
It's reestablished. Okay. Little skip of the internet. Okay. Thank you, Robot. Okay. So let's see. What do we have here? Oh yeah. So Canadian. Yeah. So Canadian's kind of starting to perk up a little bit more. I think they tried to bring it down. I would assume that was because gold was going up in value and oil was going up in value again, and that type of situation usually pushes this currency down against the dollar, which means the dollar is losing in value against Canadian. That's what it really means when this is going down. When it's going up, dollar is gaining value. So that's usually the opposite action there. Now let's take a look at it. There's in the J4X, same situation. Now let's take a look at it in the oil market itself and see what they're doing there. There it is. Okay, so there's the light crude. You can see it's been going up in value for a couple days. You can see it over here on our fact check spreadsheet. We are 4 days in a buy, but we are 1 week in a sell. But I believe we are also at the same time all week long in the buy, but we're not. We've just been in and out of it very tightly, but we've been in a daily buy since we went into the weekly sell, so it's kind of a neutral for us. But you can see the daily, the shorter term money is coming in again. Matter of fact, did anybody see that action in natural gas yesterday? Whoa, doggy. I think that's the best way to describe the action. Whoa, doggy. It's a country saying. Us country folk. All right, there's natural gas. Look at that action last 2 days. Wow. Huh? All I can say is, wow, it's moved up 40 cents per cubic foot. Wow. More than 40 cents, but that's 40 cents is enough right there alone. I mean, one moment it's a little under $4 and now it's at $4.40. It's like, wow. What excitement. And we've been in that weekly buy all week long, just waiting for the confirm. The strength has been there. We've been in a daily buy since here, since the $4 area, and now we are up in the 440s. What a moonshot going on there, traders. That's a pretty aggressive move. It gets to $5. You're talking about a 25% move up. Wow, in days. Just in days. So, wow. I mean, I don't know if it's going to get to 5, but, all I know is what it's done already. It's about 9-10% move. That's pretty darn exciting to me. That says a lot. And Doc is the one walking around telling you we're heading towards an ice age. And you got all these crazies telling us we're going into some type of global something or another that's warm. And all I keep on seeing is the math keeps on showing that we are at a 10-year low in temperatures, and they keep on whitewashing the NASA maps. So in other words, NASA puts out a temperature map across the planet by some of our, like SOHO and a few of these other, I think it's SOHO, a couple of these satellites that watch the temperatures, and it keeps on showing us that the 10-year average is lower. In other words, the Earth is getting cooler. And then the environmentalists take it, the EEM type of people, and they take it and then they white out the cold and they just show you the hot. And then they go, this is a NASA map. They doctor the NASA map. I think it's the funniest thing to watch go on in our society. I'm surprised someone's not suing them for doing that. But, it is the weirdest thing.
Unknown caller.
Unknown caller? Who is this? Unknown caller. Unknown caller, who are you? Oh, yeah, I'm in the middle of a broadcast. You can say hello to the world if you want. You can. How about if I ring this number back in another hour or so? Excellent. Ta-ta now. All right. Let's see. Where are we? Oh, yes. So, let me think now. What do we got going on here? Oh, yes. Natural gas. Zoom. Yeah. So I guess someone thinks that the value of gas is going to go up in value because they're reaching for it with both fists, that's for sure. Both hands, fingers wide open. Yes, indeed. Now, let's take a look at it through Forex. They do trade the gas there, which is cool. There's a lot to be said about, and we talked about this yesterday, there's a lot to be said why the commodities are a part of the currency universe nowadays. And that's because, let's see, where is that at? Is that not gas right there? That is, I know they have one of them here for it. Might be towards the energy side of it. Right there, there it is, natural gas. Anything denominated in dollars that's traded actively in dollars can be used as a surrogate for currency. So in other words, you're buying natural gas from the United States. You're in Canada. You could be Canada, you could be Mexico, you could be, Great Britain, wherever. And you go and buy it. Now what you need to do is you've just bought something that's denominated in dollars. Now you need to go buy dollars. So because you've just bought the product, you're long natural gas, you bought that. At the same time, you bought it in dollars, so now you got to convert your currency to dollars, which means, of course, you're short dollars, right? Because you got to buy dollars. You're not just flat dollars, you're actually short them, okay? Because you got to own them. And if you don't own them and they go up more in value, then you lose money, and if they go down in value, you make money. So obviously it's a short. It's not a neutral. And so that's why we intermingle or congrue or whatever word you want to call it. That's why we talk about commodities here, and at the same time we talk about Forex here, because in a quantitative easing financial market, which is what we've been in for 13 years, that's how it works. In other words, dollar-denominated products become currencies. Before that, it didn't really matter. They weren't worrying about who manipulated their currency, how much money supply you had out there. That didn't matter. In other words, it was up to the individual country. But now the Federal Reserve and U.S. government, because of quantitative easing, seems to ride roughshod, as they would say in cattle country, over them. In other words, they do them favors or they hurt them, one or the other, somehow or another. By lending money for lower interest or no interest, things like that. All right, so you can see there, it's been acting really strong, just like Chicago Quant has been acting very strong here for that whole move. Okay, as Buckwheat would say. Now let's jump over to gold. All right. Not that. Let's see how we do that. We'll do that later. All right. So let's jump over to gold real quick, and then we'll go back to the currencies. We'll look at the last 4 pairs trades that we watch. There it is right there. There's gold. Trading at $1,800 an ounce. Now, how did that happen? That's curious. Those are two of them. If I hit refresh, maybe that'll straighten that out. All right. So what you see here is gold has been in a buy for a couple days here now. It's kind of been sideways to up. You can see the weekly's been in a buy since here. So this is going up in value. So what's that mean usually for Canadian? That usually means it's going down in value. And did we see that? Let's go back and look at that. Where's it at? Right. Canadian. Where are you, Canadian? Let's just put Canadian back up there to show you that. There's the Canadian right there. And what you're seeing is you see the Canadian was going down. You see the three red hinkies. But what's happening is that we're just starting to turn back up again there. And let's see if we can find that on, yeah, we can do that right there. Let's go like this. There's the Canadian. You see the Canadians doing, we were going down, you know, matching up to the oil increasing in value, the gold increasing in value, so forth. And now it's starting to stall out and try to perk back up there. And so then we go back to gold. You see gold right there. Also in our work, going up in value. We've been in a weekly buy since the 17 something, 17 and a half-ish, 1770 area, something like that. And you can see that it's you know, moving up in value there. All right. Jordan, you have any particular questions you'd like to ask, you know, like or product you'd like to see? Because we're going to go back into the currency side again now. We're going to shoot over to the South African Rand to match up to the metals market. And we're going to see if, since gold is going up in value, we assume the South African Rand is going down against the dollar. That's what it should be. I mean, you know, it's going down, becoming stronger against the dollar. Right there. So this baby should be going down. So far it looks like it's doing that. And we'll also put that up over on Chicago Quant. So there you go. It's been heading down. That's what it's supposed to do. And the same thing over here on Chicago Quant. Yeah, right there. There's, it's going down. That's usually when you see the strength. Oh, here's middle age. Hey, I wanted to see gold retrace to 1744, but may not do it. Anything is possible in there. I don't know. You know, you would have to assume, you know, middle age, and have a nice weekend too. Good Friday chair. You'd have to assume that if they're going to start tightening, interest rates are going to go up, right? And so that's going to put pressure on the metals complex. But if there's uncertainty and there's inflation, or if it's a if markets look at it and say, oh, there's a confirmation that that they're getting inflation, so then it might go up in value. You know, it kind of has that crazy combination of things. You know, you're not sure which one is which. But that does seem to be the recipe of it all, you know what I mean? That does seem to be it. Does that make any sense to you? I mean, it's flipping back and forth. It could be one or it could be the other at this point, you know? It really could. That would be the best way for me to figure it out. What do you think? Does that make sense to you? All right. We'll see him answering, and we'll go from there. But in the end result is, yeah, I hear you. It would have been nice to be able to get the back and fill. All right. Let's do the other three currencies, and then we're going to zip back to silver. We'll take a look at the silver. Yeah, that's what I was thinking, too. I think that makes sense. I think that's, you know, we're trying to understand how the market's thinking. Not necessarily what our math says, but just what the market's thinking. And I would think they would think that way. And then we follow our math to see what it does. All right, from there we go to the ruble. You can see the ruble showing, you know, it's been moving up a little bit against the dollar. In other words, it's losing value. It's in a weekly buy. Nothing major, just kind of sideways. You can see how tight the manifold has gotten. See if we can show that. And it's really become tight.
Unknown caller.
Oh, I got no time for these colors. All right, now let's jump over to the yen. There's the yen. You can see that action there. And I'm just going to throw the ruble up on here real quick on the J4X, just a closing look. It should be moving up. It's trying. Yeah, it's kind of sideways. Now we're looking at the yen. Let's see what the yen looks like there. And as you can see on Chicago Quant, there it is on J4X, and you can see it's been in a buy for a couple days. What is it on line? Where's the yen? Right there. On the line 19, you're seeing two days in a buy, 4 days in 4 weeks in a sell. It's trying to show some strength there. You see the same thing on J4X there. Then you go to here, and then you see what do you see there? You see the same situation. It's in a weekly sell, because that's what the fact check spreadsheet just said. And you can see here it's it's moving up now on a third day. So we're seeing that strength again. It loses value against the dollar when that happens, when it's going up like that. So, and that's the action we're seeing there. Now, last one of all is the Mexican peso. I hear the John Wayne song in my head when I say peso. Don't ask me why. And there it is there. You can see it's been going up for a day or so. We keep on thinking that it wants to go back up. That's why we have those two big black dots there. We think that's the type of action we're going to see. And you can see we're in a weekly buy for a full week right there. See that right there? Yeah. You can see that right there. And it looks like it's going to hold up in that weekly buy and closing the daily buy right there again tonight. And that's the strength. You saw a little volatility signal right there with the red and green. So that action is there, and you can see right here. We'll see if it shows the same characteristics, which normally this J4X chart does. They march together. Our work and their work march together. Just a little time delay on the J4X, but it's better than anything else out there. Let's put it that way. You see right there, there's the strength. Just like here. Right there. Cool, huh? All right, now, middle age. Let's check out gold again, and let's look at silver. Let's take a bite out of that. How's that sound? Let's see if we can figure out what's going on over there through the quants. There's the gold again. You can see the strength that's been there. It refuses to go down. Even it's got that sloppy sideways type of action that's going on there. And let's take a look at silver. Right there. Silver, same sloppy action. And in many ways this looks like a reverse head and shoulders. Maybe this is the beginning of a move up. We keep on waiting. I just want to see the weekly go into a weekly. I mean, where are we now? That's line what? 9? Line 9 on the fact check spreadsheet. 15 weeks now. 15. Where's that mouse at? There it is. 15 weeks in a sell. That's a long time. Let's just put it up over here too. But that's a while. It doesn't want to let go. There it is right there. So we've been in a weekly sell since the, what is that? That's a Mexican peso. Wrong product. Let's see, right there. Is that right? No, wait a minute. I was right. There it is. I just went after the wrong product, that's all. Yeah. So right there, I mean, let's scrunch that up. So 15 weeks. We were in the $28 area when we went into a weekly sell. It was going down to the low of what? $22.97. So it dropped $6. That's a lot in that product. A lot. Like you say, They have to knock it down to bring it up. Yeah, the old guys used to say that to me all the time. You want a bull market, you got to take them down to take them up. That's so that a guy had the opportunity to buy. The guys on the trading floors, in the funds, they wanted to get in at a low price to sell it high. And then I think it would be advantageous to the central bank for one more flush. Yeah, you would think. To be honest, I don't know what's good or bad for the central bank anymore. I don't think I feel comfortable. I think they're so far out on the limb. I'm not sure I see how to climb back, because every movement back towards the big tree itself, from being way out on the limb keeps on going down. In other words, it starts to act like it's going to break. So the more you move towards the tree, in other words, if you look at the tree as this pre-QE, and you look at a big limb on the tree as the QE, okay, and you imagine whatever object, a person or a cat or a squirrel or whatever, climbing out on that limb, going way, way out on the limb, okay? This is how I view the whole thing at this point. I really feel that it's gotten to a point where any movement in either direction is breaking the limb. So in other words, if you start to turn around and try to go back, every move now hurts the limb, and it's going to break. And I don't believe you can move back with the way they've been functioning, with their philosophy and idea and so forth. I don't think they can move back without breaking the limb. Now, is the limb like world chaos and a disaster? No, not really, because I just got done explaining to somebody this morning that we are an island, America. In other words, all we've done is help the world to get into debt. What a crazy thing that is. The United States and the Federal Reserve in particular, and our Democrat Party in particular, all they've done, when we did the QE at the beginning of the Obama administration, at the end of the election there for him, and what the QE was supposed to be is just a temporary thing for 1 or 2 years. Okay, and instead they made it a policy. They saw that as an opportunity to spend more money. And so what they did is they bankrupt the world. At that point, Lloyd's of London was out of business, and Merrill Lynch was out of business, and Lehman Brothers was out of business, and Bear Stearns was out of business, and Citibank was like Deutsche Bank and Lloyd's of London out of business and being propped up by their central bank, and and it was dozens others, Santander and Bank of Scotland and HSBC and Barclays and just you can keep on going on. They're just all over the place, Wachovia, you just keep on, throw a rock, you're going to hit something. And so my point is that QE should have ended going into the first couple of years of Mr. Obama. But they used it for 8 years to keep interest rates ridiculously low and to spend ridiculously more money. That's all they did. And so they wrecked GDP during his 8 years because of it. It was only like 1.25%, 1.5% GDP. Then Mr. Trump came in, started to straighten out the situation. And then they had to get rid of him. They created this COVID situation, close down society and take control of the elections, which now they've changed laws so they can't do that again. So I look at the whole quantitative easing as this big tree. The Federal Reserve is a big tree. And the quantitative easing is the limb. And for some reason, something's climbed out on the limb, and now it's gotten so far out on the limb, any movement is a threat to the limb to break. In other words, if you climb out more, it starts to break. If you climb back in, it starts to break. And I don't know if we can climb back to the base of the tree anymore. I don't think we have that. Now, does that end the world as we know it? No. it just means it will go through another change. It'll be another, financial change. And remember, we had this conversation, what was it, a couple weeks ago? Or a week ago? Yeah, it was last week. I was talking about it. How we're looking at the 100th anniversary of not the 100th, I'm sorry, the 40th anniversary of Bretton Woods, where they got rid of gold linked to the dollar, to the currencies in general. Before, currencies were linked to the gold in a distributed way. So you're Britain and you have $3 billion worth of extra dollars sitting in your trade account, okay, because of, import, export. And you don't want the $3 billion anymore, you want gold. So you go to the U.S. Treasury and you go, okay, I'd like to convert my $3 billion into gold. And that was the law. Now, the government back then had decided, Richard Nixon's government had decided that if gold got down to under $10 billion in our reserves, we would change that law, and that's what happened. They started, other countries started to try to tighten up their their account balance and convert it to gold, so they could just stick it in a gold situation, in a bank, and they stopped Bretton Woods, and then what they did is they came up with an idea that, okay, countries will be individually responsible by having to keep X amount of debt to the GDP ratio, which made sense. I didn't have any problem with that, but they never enforced it. There was no enforcement to it, so it didn't matter. So what happened was countries became more in debt now. So before, when they had a trade balance, they were able to convert it to gold. At least it was an asset. Now, they were allowed to go into debt, but only to the amount of debt to their GDP, which is a whole different thing, which now forced the rest of the world to become debtors as time went on. For a long while, the United States really tried to adhere to it. It did a pretty good job about it, because we were the world reserve currency, and since we came up with the bozo idea, I like to call it the bozo idea because it's kind of clownish. It didn't have any enforcement. That's the problem. Whereas the exercise in gold had enforcement. They're going to take our gold. We better keep our trade balance more even keeled. Now, instead of borrowing and all that stuff, the trade balances started to fly out, and France and Britain and so forth wanted to exercise their too many dollars now into gold, and the United States went, whoa, wait a second here, we're going to get down below $10 billion worth of gold. No way, no thank you. Let's break that connection. And so then the world went into debt. And that's where we are today. Now, what happened was they got to a point where all these international, we went into this global thing, which is fine. In other words, banking across state lines and international lines and all like that, that's fine. And making trade easier and more accessible to everybody, that's fine too. But when the financial system bought worthless bonds, that's when the world came apart in 2000. That was going on from around 2004, 5, 6. During the Bush years, President Bush is on record to complaining about it to the House of Representatives. Barney Frank is the mastermind, the Democrat head of the Finance Committee. He was the man who basically thought that it was a brilliant idea. President Bush was fighting the concept. There's videos of it out there, on YouTube about him saying, Congress must do something about this or we're going to destroy the financial system. No one listened. And I saw Barney Frank crying that day on CNBC to Marie Bartiromo and apologizing for his bozo actions, and his craziness. And what happened was everybody in the world got trapped into buying junk. Because what he did is he made it easy for junk to be created. And they did it through the mortgage markets. And so what I mean by junk meant that they allowed bonds to be created that had no assets. And I'm going to say that again because you're going to say, what? So in other words, you bought a house, you created a mortgage, which generated a bond. Okay? The house you buy, say, for $200,000. But the house is only worth $150,000. So if the buyer of the house defaults on the bond, you lose 25% of your assets instantly. Now, that wouldn't have been too bad. But what they did is Mr. Frank allowed enormous leverage and said, oh, no. You're a bank. You can buy 6 of those bonds for the same amount that everybody else can buy 1 of those bonds. So now Bear Stearns and Lehman and all that have leveraged themselves 6 and 7 times. So now if you buy 6 of those bonds, then what happens is if they all go under, you've lost, instead of 50,000, you've now lost 300,000. And let's say you're the bank or institution, or you're the customer, and you only have, say, $50,000. Let's say you're using the margin of 50%. Okay, so you put up 100,000, and you have the potential to lose 300,000. So when it goes under in value, now you find yourself down $200,000. You don't have 200,000. You only had 100,000 to begin with. The mortgage to borrow, to trade that bond, to own that bond. Now you're belly up. So in other words, Deutsche Bank went under from that, and Lloyd's of London went underneath. They went under. All of them went under. And what they had done is they packaged these bonds into something called CD something or others, a debt, like something collateral debt, some type of. And what they did is they took all the good bonds and they put them with the bad bonds. They put them all in one big package, saying, "Oh, so only 1 or 2 of them will go out. What's the difference?" But the problem is not that the packaging was that bad. The problem was that the banks were allowed to do 6-to-1 and 7-to-1 margin to it. So in other words, if they'd only bought 1-to-1 margin, Deutsche Bank would still be in business today, or Lloyd's of London would be in business today, or Merrill Lynch would be in business today. Okay? Instead, they're owned. Day, if you wanted to have a look. What's it? Jordan. Oh, DXY. Sure, let's go check it out. And so that's what created the whole financial mess and bankrupt the world. Collateralized debt obligations, CDOs. That's what they called them. So it wasn't putting the CDOs together as much as when they allowed margin to go to ridiculous levels, 6, 7, 10 times. So in other words, Lehman buys 10 of them, but they're using the margin as if they bought 1 of them. Boom, puts you into bankruptcy. All right, let's go check out the dollar index. Right there, we have that in the ETF. You can see it's moving up today. The dollar is getting firmer. You can see let me Control R. You can see it's got some volatility signals going on. Let's try that again. Control R. Oh, not that. There we go. And you can see there, we've been moving down, and now we're trying to move up. We are in a weekly buy for a couple of weeks. You can see that. What's it? 4 weeks now. This will be. Let's double check the fact check spreadsheet. That's right there. Yeah, we're 3 weeks in a buy. That's line 25, and we're 4 days in a sell. And today they're moving up, and obviously it makes me want to take a look at the euro real quick and see what the euro is doing. Oh, you can't see that. Let me go over there. There it is. Right there. There we go. So there's the dollar index in the ETF form. This is not the commodity one. But it's the same combination. It's just an ETF form, and it trades from for the last hour and a half. It's been trading in the pre-market, and you can see it's trying to lift up, and it does make me want to take a look at the euro right now and see if it's moving down. It is. Look at that. And now it's even below the sell number compared to no more than 30 or 40 minutes ago, we saw it in the buy. Let's take a look at the stock market and see what they're doing there. The Dow Jones Industrial Average is up 70 points right there. The NASDAQ is 37 points, and the S&P 500 is basically about 10 points up. So it's not having any effect on the stock market, but then that's the Federal Reserve. They keep the stock market locked in a range also, just like they do the currencies. So they're controlling that just as easily as everybody else is, they're controlling everything else. All right, so that's pretty much, I think we're going to talk about it. I think that's going to be the title today. The currencies versus bonds. I think that's a real factor there. And the CDOs. I think that's really what it all comes down to. And that's why the world is the way it is. So, in other words, now the Federal Reserve and Mr. Powell is speaking in about 37 minutes. But I don't expect to hear him say anything particularly about it. I just think that he's going to defer it to September, because then it's going to be live and we're going to have more opinions. And he said he's looking for more data. So that should basically take care of that, And that is where we're at. All right. There we go. All right. Good. I got it all set up there. All right. Now, let's see. Does that help you out there? Let's go back to Jordan for the UUP right there. No, that's not it. There it is. So we're seeing that. I imagine we're probably going to be seeing, let's look at the Swiss real quick. The Swiss probably doing the same thing. Right? Yeah. So the Swiss is moving up even more now. It was lower today. And I guess Canadians probably doing the same thing also. Yeah. We're seeing them all starting to firm up. They're buying dollars. I don't know. Like I said, they always they do that crazy stuff. We may be the problem, and what they do is they buy us. You're a walking encyclopedia of finance. You need to write a book. I've turned down book deals too many times. I have no interest in writing a book. But yes, Futures Magazine. Oh, the guy that managed that, owned it. He always said, you gotta give us an indicator, any indicator that you invented. We want to have one of your indicators, and we want you to write a book. I used to say, no thanks. And then every so often someone says to me, you got to write a book. I go, no thanks. I don't want notoriety. That's one of the most wonderful things of all is to be able to do the Dukascopy webinar every day. I get my angst out about the markets. I get a chance to talk about reality, and then I feel completed. After I get off this webinar, I feel completed. I'm fine. Why do you think I can sing at the end of every show? I'm that simple-minded and happy. I'm a happy guy. Remember, do you remember Middle Age? I don't know if you watched this. I used to play the song Happy, from Purnell. I used to play that, Happy when you're something or another. But then when we joined up with YouTube, you can't do that stuff, So, what helps a combination of it all is having the algorithm helps me be able to project concepts and ideas of what's going on and understands it without seeing the words. So when I see the stories, then it's even worse, in the sense of it makes it tells me the truth. The truth will set you free, as they say. The truth will set you free. So. And many people try to steal my work, so it's a lot easier to just stay underneath the radar. Just so much easier to be underneath the radar. All right, what else we got to say about that, traders? Anything particular? I don't think. I think it's a Friday. Maybe Doc should get out of here. Unless anybody want to see anything, I'll give you a chance to throw something out there, and we can look at it. And if not, then I'm going to pack it up and start singing. Because it is Friday. It's a TGIF, baby. I'll take a sip of my water. And we're going to move to the stock market and just see what they're doing there. I don't see any real movement there. It seems to be doing all the same stuff, you know. Yeah, I don't really see much going on there. JO. All right. Let's check out the JO. I know when it's did it go into a sell yesterday? I thought it did. But then I think we had to straighten that out this morning. Somehow or another I was delirious. Remember, I do that. I look at the charts and look at the lines and I throw the dots in there so everybody can see it. I mean, I don't need to put those dots in there. I mean, it's right there every day, and it's there on the right side too. Let's see, where is it at? Let's do this. Let's fix that. That one doesn't do it, but if I go like that, it does. It tells you. See right there, it says 23, so it's a plus. See that in the right corner there? Can you see that? Now let's move that over. Let's do this. There it is. See how it says 23 right there on the right side on the algorithm for the daily? So you can see where it's at. So, I mean, I really don't need to put the line in there. If it's plus, then you know it's going up. But I put it in there because everybody wants me to emphasize it. And it's still in the buy. You know, it's still rocking and rolling. It's in the weekly buy. And maybe it's going to go after this stuff up in here, you know? Right up in here. This hump. Maybe we'll see it make that move. So. All right, traders. I guess we're going to get rolling along. And anything else you want to see? If you want to see something else, we'll show it, you know? So. We can. And if not, we'll start singing. Doc will start singing. Okay, Australian. Let's go to Australian. Right. There's the Aussie Dollar. Right there. Yeah, that's been in a weekly sell for a while. Look at that. And then it's pressing down. It looks trying to go back into the sell. It's been in a buy for the last couple of days. The weekly doesn't look like it's doing anything at all. Even with the super. They're all underneath. You know? All right, traders. Everybody have a nice weekend. We're going to get out of here. Happy trails to you until we meet again. That'll be TGIM. That'll be thank goodness for Monday. Happy trails to you, to all our trading friends at Dukascopy and the world in Chicago Quant. Be safe, be smart.